The 2025 housing market forecast is upon us. Are you prepared for major shifts?
Absolutely. We're diving into insights from experts like Jerome Powell and Cathie.
That's right. They'll identify critical factors influencing mortgage rates and property values.
And the best part? Our advanced AI summaries condense these analyses into mere minutes.
Welcome to our channel. Today we explore the housing landscape for 2025.
Let's jump into Jerome Powell's analysis of the rising interest rates.
But don't go anywhere. Up next, Cathie Wood will share her investment strategies.
And stay tuned for insights on CoreLogic's take on distressed properties.
Quick reminder, this content is for educational purposes and not investment advice. Will 2025 be the year California finally sees a housing market crash? With some cities poised for declines, let's dive deep into the surprising data.
Absolutely. Despite a recent 3.6% uptick in home values statewide, we're seeing troubling signs ahead.
So, are we talking about a complete market crash or just some slight corrections?
More of a gradual correction in several key areas, but it's essential to understand the dynamics at play.
Looking at current trends, cities like LA and San Mateo are already feeling the squeeze from increased inventories and exodus trends.
It's like watching a game of chess where both sides are making unexpected moves.
So you're suggesting the housing market is operating like a game, but with very real consequences for buyers?
Exactly. The market's responses depend on local conditions and inventory measurements. In Lake Tahoe, we see a perfect storm of rising inventory. Houses are now listed as former Airbnb rentals.
So the sudden influx of listings is forcing down prices, right?
What if I bought a rental here last year? Am I stuck with a loss?
Not necessarily. Remember that real estate is cyclical. These dips can correct over time.
Los Angeles is experiencing a historic decline. Figures indicate up to 9% drops in some neighborhoods.
Exactly, with people flocking to more affordable areas, the demand in LA is tapering off.
I never really saw LA as vulnerable. What's changing?
The pandemic changed preferences. More space and affordability are now key factors. Stockton is where we saw a recovery during the pandemic, but now the inventory is starting to rise dramatically.
So here's the catch. With more homes available, we can expect downward pressure on prices.
This sounds like a classic case of supply and demand gone awry.
Right, that's why monitoring inventory can provide insights into where prices are going.
In a best-case scenario, we hope to see stabilization, but we could experience further downward trends as well.
I predict fluctuations as we monitor economic signals closely. Buyers should be vigilant.
Sounds like keeping a pulse on local data is critical for navigating these waters.
As we've discussed, some cities may face corrections, while others remain stable.
It's about navigating uncertainty, adjusting our strategies as market dynamics shift.
So the key takeaway is to definitely do your homework before making any moves.
As the world continues to grapple with the hangover of the pandemic, one question looms. What's going to happen when the real estate debt reset hits in 2025? Ken McElroy is here to break it all down.
Absolutely. Understanding the dynamics of interest rates, especially how they've surged from 4 to 7%, is critical for anyone invested in real estate right now.
So, you're telling me that my investment from 2021 could be underwater?
Underwater? More like sinking like a stone if you're not prepared. Ken's going to share insights on how to navigate these turbulent waters.
To put it plainly, if you're not aware of how debt service coverage is shifting, you could be caught off guard. And I'm not talking about culinary surprises here. This is financial peril.
Debt service coverage. Is that like a mortgage? I don't get it.
Think of it as your safety net. It's the bank's way of ensuring borrowers can cover their loans. But if income shrinks, that net is looking pretty frayed.
Since 2019, interest rates have skyrocketed. Anyone who bought real estate in 2021 with a variable rate is now facing payments they never anticipated.
So it's like getting hit with a sudden bill you can't afford. Ouch!
Exactly. Instead of sipping cocktails by the pool, you might be scrambling to cover unexpectedly high mortgage payments.
Forget the jargon. Debt service coverage is simply how much income a property generates compared to what it costs to service the debt. If you've got $1 in debt, and you're only making 50 cents, that's a huge problem.
That's like trying to pay rent with half your salary. Essentially, it's not sustainable.
And that's why the banks are now sweating bullets. No one wants to lend to a sinking ship.
As the interest rates climb, property values can plummet. These cash-flowing assets go from being golden geese to lead weights.
Wait, so these distressed properties could actually be a goldmine for investors?
Precisely. As one door closes, another opens. Picking up a property that's been underpriced can lead to amazing returns. Ken forecasts 2025 to be ripe for picking distressed assets. This wave of debt maturity could create a buying opportunity unlike any we've seen.
Absolutely. Savvy investors will be on the lookout for properties that have been repriced due to interest rate hikes.
So if you have the capital, this is your moment to shine.
Exactly. Just like vultures swooping down on a feast, investors who act fast could land lucrative deals.
Investors who adapt and pivot will thrive, while those who don't could wind up with hefty losses.
It's like being in a storm. You've either got an umbrella or you're getting soaked.
So basically, preparation is the key to weathering this financial storm.
Right on the money. Prepare, adapt, and seize the moment. The tides of the housing market are shifting. Let's uncover what's really happening in the cities facing the steepest price declines.
Absolutely, Todd. The current data tells a more ominous story than many local realtors might admit. We're not just witnessing a dip. This is a full-blown affordability crisis, one reminiscent of the 1981 housing market.
Just think about it. If mortgage rates rise from 3% to nearly 7%, that's like turning your modest $1,500 mortgage into a hefty $2,500 payment overnight.
We're approaching affordability levels we haven't seen for over 40 years. It's alarming.
That means first-time buyers are left in the lurch, just like trying to squeeze toothpaste back into the tube.
Let's start with Lafayette, where home prices have dipped around 3%, mainly due to dramatic home insurance inflation.
A reminder that every dollar lost in insurance is another nail in the coffin for potential buyers. It's surprising to see people relocating back to cities they previously fled during the pandemic.
Exactly like a rubber band snapping back to its original shape, these shifts are reshaping local demand.
Looking ahead, it seems these challenges will not resolve overnight.
Definitely. And if consumer trust dips further, you could see even more price reductions. There's a light at the end of the tunnel. As travel comes back, so might short-term rental investment.
It's like watching a flower bloom in spring, slow but certainly promising.
The bottom line? Keep abreast of changing affordability metrics. It's crucial for savvy home buying.
Adapting to these trends is like riding a wave. You have to navigate carefully to stay afloat. As Hurricane Helene's scars linger on the landscape, we're here in Yancey County, witnessing a powerful glimpse into the desperate search for closure.
Absolutely. And Bill is demonstrating the Aqua EY sonar technology. This handheld device is a game changer for detecting bodies in water. No more guessing.
Wait, so this gadget can differentiate between a body and, let's say, a rock? That's incredible.
Exactly. It's like turning on night vision in a pitch-black room. You can finally see what's really there. The blend of cutting-edge tech and human resilience reveals just how crucial these operations are. Can you break down how the Aqua EY functions?
Of course, it essentially sends out sound waves that bounce back when they hit a body. It's specifically fine-tuned to identify human remains.
So instead of sifting through mud and debris, we can be laser-focused on where to look. That's brilliant.
The Aqua EY isn't just cool tech, it fundamentally improves our chances of recovery. Reports show we've improved detection rates by over 60%.
Wow, that's like finding a needle in a haystack, but we're talking about lives and families here.
Exactly. It's the difference between hope and despair for countless families. What really struck me was how the community comes together. Can you speak on the partnerships you've built?
Absolutely. We've had tremendous support from local law enforcement. They not only provide resources but invaluable intelligence.
So it's like a symphony, everyone playing their part to restore harmony.
So what's next? Are we going to see drones delivering equipment in search operations?
That's certainly on the horizon. Imagine being able to deploy a fleet of drones to survey areas inaccessible by foot.
The future is looking bright for recovery efforts. Now, that's an optimistic take.
At the end of the day, this is about humanity. The technology plays a role, but the heart of this mission is the community striving for closure.
Absolutely. Like a lighthouse in a storm, They guide those lost to safety and solace.
Can we all be community lighthouses in our own lives? I love that.
The lull before the storm of housing market predictions is upon us. Redfin's latest insights into 2025 reveal some eyebrow-raising forecasts.
And I'll be the first to say, not all these predictions resonate with me. Let's dissect this.
Skeptic mode engaged. I can't wait to see where we clash and where we find common ground.
So first up, we've got home prices rising by 4%. This is according to Redfin, who seems pretty confident.
Yeah, but with interest rates near 7%, do you really think that's feasible for most buyers?
Isn't it like trying to buy ice cream during a summer heat wave when the price just keeps climbing?
A 4% increase seems to reflect the ongoing demand versus supply issue. That trend feels familiar at this point.
Familiar, but alarming. So if prices go up and wages are stagnant, what's the impact on everyday buyers?
It's like trying to catch a train that keeps pulling away from the station. You're forever behind. Redfin anticipates a stagnation in mortgage rates, particularly around the elusive 7% mark. How do you both feel about that?
A lot of people are pinning their hopes on rates dropping, but that feels like trying to find a unicorn.
There's a real chance people will be leveraging these stagnant rates into longer-term tenure or rental income instead. Redfin suggests a renter's market. Sounds promising. Do we finally have a battleground where tenants have leverage?
Yes. Think of it like a sports tournament where renters just won the trophy for negotiating power.
Finally, now we have players making plays on rent. What about affordability, though? Are the number of homes going up in 2025 just wishful thinking? I mean, didn't we just see a huge slowdown?
Yes, but the construction dispatch is coming back. It's about time we fill that gap in housing.
Like watering a thirsty plant, it won't bloom overnight, but we're finally getting back to nurturing it. With home sales projected to tick up, that would be a welcome shift. What do you think drives this?
Definitely the balance of demand and supply. Both have to gain momentum for that spike.
It feels like we're on a roller coaster, slowly inching up, but still facing the drop.
So in short, whether you're buying or renting, understanding the market is crucial.
Agreed. Knowledge is power, and this journey is going to be layered.
Just like a multi-tiered cake, each layer requires different considerations.
What an incredible dive into the world of real estate.
I couldn't agree more. It was awesome to hear from the Bigger Pockets team, especially their views on Redfin's predictions.
Right? They really paint a vivid picture of the potential rise in home prices.
Exactly. But then we had Lance Lambert highlighting those cities where home prices are actually dropping.
Talk about a contrast. It just shows the complexity of the current market.
And let's not forget Bill's insights about community recovery efforts. It's both harrowing and inspiring.
For sure. But it's interesting that they disagreed on how deep the impact of interest rates will run.
Yes, and that really opens the door for ongoing discussions among investors.
If you found value in today's insights, make sure to hit that like button and subscribe.
Your engagement helps us keep bringing you these in-depth discussions.
Thanks for joining us today. Don't forget to check out our other videos for even more financial insights.